All right, so this video is going to look at contract price invoicing, sometimes called fixed price invoicing. We're going to have a look at the default claim stages and how you can preset your own. We'll have a look at the invoicing and sharing to the client. We'll have a look at the statement, and we'll also have a look at retention, which is something you can turn on if you need it for contract price invoicing. So across into my account, first thing I want to touch on is when you create the job from an estimate, it asks, once you select contract price, it asks whether you want the default invoices. So just to talk you through what they are, the default ones, there's 6 of them from memory, and it mirrors a master builders or an HIA contract where you've got like deposit, base, frame, lockup, fixing. I probably messed the order of those up, and then completion. I pretty much suggest to anyone to leave that tick on, even if you intend to change it, because it's a nice start point and you can always delete and deviate from it. But yeah, first protocol is just that when you create the job, this does have influence on the invoices. If I go back to my job and show you them, there they are there. So this is what it looks like with the defaults on. And then into the second point of, if you commonly deviate from this, can you preset your own? And the answer is yeah, 100%. So I've already got one called example. When you save a preset via here, you give it a name and it saves it. The parts it's saving specifically are the names of all of them, the percent total, so that if you use it on another job, it's looking at the same percents, but the dollar figure will change because the contract overall for the job is different. And then a extra point is it will store the comments, which is kind of nice if you have a blurb around, deposit covers this and base stage covers these items, etc. That's reusable too. Now let's have a look at invoicing and sharing it. So to start this, I'm actually just going to grab my deposit invoice, and just for simplicity, I'm going to take out these variations. In the variation video, we talk a bit more about how you get those dollar totals in and invoice for them. For now, all I'm going to say is that if you open an invoice, you will have the option to assign dollars from variations to that claim. But I'm going to set them to 0 just for simplicity. In this example, we're going to print it to give you a sense of what it looks like. Perfect. Now, 2 things of note. Number 1 is this has a dirty big draft written across the center. And I want to highlight that the status of the invoice changes how it gets displayed. So right now it's pending, meaning it is a draft. It's not issued or anything. And because of that, there's no payment due amount just yet. Due date, I should say, just yet, because it hasn't been set. There's no invoice date, because also not set. The other part is down the bottom, the payment terms. So this is what's set by default on all our invoices. If you want to change it, and I recommend that people at a minimum just read it and see what's in there, that it covers them. But if you do want to change it, it's in this little cog and you go manage payment terms. By far the most common is people adding a second section about payment methods. So, hey, we prefer payment via direct deposit, or if you want to do credit card, call us up. We do accept check or cash if you really need to. Whatever you want, it's obviously going to match your way of doing business. So definitely feel free to add that in. Note that if you change it, it's the same for all jobs, and hence you really only need to set it up once and edit it in the case that you change your bank details or payment methods, etc. Awesome. So I'm going to go and change this status to invoiced. And I should add some comments just so I can show you where they go. Comments, save and close. Although, as I've mentioned in other videos, specifically around variations and purchasing, we have this save and send option and a save and close. If you're super confident, you've used Build Exact for a while, save and send is quicker because it just bypasses the preview and sends it straight away. When you're new, I would go save and close because I really like previewing stuff, just to know what's on it really. So printing this again in a invoiced state looks different. It's got an amount due, payment due date, and it's all complete. It's ready to go out. Notice we also changed the wording. So when it's in this pending status, it's progress claim because it hasn't actually happened yet. And when it's invoiced, it goes to claim tax invoice. Now, I'll come back and show a bit more on those statuses in a second, but let's issue this invoice. So if I go share, much like a lot of different options in BuildExact as far as sharing to clients, it's just got this kind of setup screen. It wants to know, hey, what are you sharing to them? Is it just the invoice, or is it the statement, or is it both? Now, I haven't talked about the statement yet. I will in the next bit of this video. Personal preference, I like the idea of sending the invoice and the statement, where the invoice covers what's due now, and the statement covers what's the overall status of the job look like. You know, what invoices have been sent, what's paid, and it's supposed to keep the client thinking as a more overall kind of point of view of the job. Recipients, no different to any other sharing process. You can choose the portal if you want. You can choose who it emails to, and you can change the email text and preset it if you really want to. We'll share that out. Note that if the invoice was pending when I shared it, there would have been a slight extra point, which I'll just bring up here, saying, hey, we're about to send this. Do you want to change it to invoiced in doing this? By default, that's what we do. The only case that sometimes comes up is where people want to share the progress claim before it's due. So literally sharing it to the client, that kind of initiates the discussion. And we see this much more commonly in commercial type projects where there'll be a discussion on, hey, this is what we completed. Client pushes back and says, no, this doesn't look fully done. I'm not paying this amount. It's much more of a commercial thing, but really just to know that you can absolutely send it in a pending status and set it to invoice later. Awesome. So we have gone through what it looks like, how to share it. And then the last bit on the sharing idea is, in fact, there's two kind of intertwined points here. There is a whole separate accounting video talking about how these invoices show up in your accounting system if you're connected. But the part I will touch on specifically here is when it does get paid, you're going to go back and change this to received. We have a little sidebar screen. It wants to know how much you received, if not everything. So you can absolutely do partial payments in the case the client makes a mistake or they just drip feed it over a few days because they've got a daily transfer limit, etc. And anytime you do this, it'll have the option to have references. Could be a transaction number, notes, etc. Whatever you want. I just think of this as the more record keeping I do, the better off I'm going to be. So if it's part received or fully received, and we print it or share it again, it updates. And the main reason for pointing this out is if we're in this part received status, this is awesome to send to the client to go, hey, you paid $5,000, but the total was actually $5,400. You still owe us this much, so you could reissue it. On the other hand, if they did pay all, the balance would be zero, and the received total would be the full amount, and there is a paid or received watermark that shows up, so you can use these as pseudo receipts if the client wants it. Now, the statement, I should get to that one. We've mentioned it a few times. We haven't shown you in detail what it is. I'm going to print it just from this cog for the sake of showing you it. And as mentioned, I really like the idea of sharing the invoice and the statement together. So let's zoom in a bit on this. It's supposed to give the client a summary of all the charges, all the amounts in the project. So showing things like variations, also talking about what's paid, what's partially paid, and it just gives them running totals. So they get a sense of how much is still outstanding for the total project, what are the next claims. I like this a lot for communication. All right, now the last part of the video is all around retention. So I'm going to go back to my estimate here, intro what retention is, and I'll go into this one. If I go through and I explain it and you go, well, we never use that, then the rest of the video would be good context, but not specifically relevant to you. So retention, first point, we see it most commonly on commercial projects, but it does creep in for some residential projects here and there. The idea of retention is that you issue an invoice to the client and there is an amount held. So similar to how you'd have like a bond on a rental property, or there'll be a holding amount if you rent a car just in case you smash it. This is kind of the idea of retention. So the client has extra cash up their sleeve that's not paid to you, that they can use in the case of, say, defects. Generally, this stuff's very heavily written into contracts, so it will depend a little bit on how your contract's done, but typically the retention will be held and then paid to you if there's no defects or no money coming out of it, paid to you maybe half on completion of the job and half 6 months later. Could be any number of different ways that's set up. When you're going through and setting it up, you will have the option to set up I'll go to this one first actually, retention total, which is the total amount that we're holding, so 5% of the total client's contract. Within this, it also will have the option to say, well, are we doing 5% of just the contract and we're ignoring any retention on variations, or are we including retention on variations? If you get halfway through the project and you started via excluding variations, you can switch over to including, but you can't go backwards. And yeah, typically this will also be something that's written into a contract. So I'm going to do excluding for this case. The other number is how much are we holding per invoice? And you'll notice we're holding 10% of each invoice up until a 5% ceiling. So that means we're kind of front loading this. We're taking the retention much earlier in the job, so that when we get to the latter invoices, there's no more retention because we've already hit that 5% ceiling. You can absolutely do 5 and 5 if you just want to evenly take it. Generally, the argument for front loading it is that when you get to the later stages of the job where maybe cash is tighter for you, there's no retention coming out. You've already taken that balance out. Awesome. Let's go create job and into the invoices, and really just to highlight this section and how it functions as we issue invoices. So right now you can see that the numbers broken down. This is the total amount we'll hold, being 5% total. There's that change to include variations button I talked about. If you want the retention total to include variations that are subsequently added to the job. And then this is how much it's held to date. And we'll talk about these ones as we put some invoices through. So what I'm going to do is go invoiced for this first one. And it instantly goes, great. We're piling up the retention. So far we've done $166 out of 1,600. If I do another one, you'll see it just keeps piling it on and piling it on. And the idea is if I quickly go and invoice these, I'm skipping marking them as received because my only goal here is just to show you what happens when you get to the full amount. Invoiced, save, invoiced, save. There we go. We've now held the full value. So what happens is this plus button is now here because we think of this as a pool, kind of a side pot of money. We want to be able to claim out of this. And as mentioned earlier, this will very much depend on when in your contract you can do this. So I'm going to say 50% can be claimed back from this on completion of project. 50% can be claimed back 6 months later. You're basically going to add an invoice like this. Call it whatever you want and definitely check that you can type 50% on completion. So when I'm looking at this amount, it's not looking at the total contract, it's looking just at 50% of the pot of money that's held here. So I would go and issue this like any other invoice, mark it as invoiced, mark it as received when it happens, when that payment comes in. And it now is starting to draw down, if you like, on this total amount we've held. And a bonus point for where you do use retention, the invoice statement is useful right through all of the retention invoices. So when we have the statement, let's go do this, and retention is on, there is a bonus box here highlighting the client to the amount that's held back, like as each invoice progresses, how much have we held? And as we invoice them back, how much have we invoiced and how much is still a balance amount. And you can see that 50% completion sitting there as well. Hopefully that makes sense. And as always, any questions, let us know, but I'll leave you to it. Thank you.